I'm staring at my account, and I still can't believe what I'm looking at. A year ago, my entire portfolio was worth $16,800, just sitting there doing its thing. And now it's at $42,800. And in investing, it's not the number that gets you, it's the journey. And man, what a freaking journey this has been. Let me show you this graph right here. This is my portfolio over the last year. See how it starts? Dead flat. For months, I've been checking this thing every day, and it's just nothing. Maybe up 50 bucks, maybe down 70. And I kept wondering if I was even doing it right. Then after a few months, it starts climbing, not rocket ship stuff, just steady. And I'm finally breathing easier, thinking I've figured this out. But then the market does what the market loves to do. It starts getting choppy. Up 300 one week, down 400 in the next. And I'd be lying if I said I didn't hover over the sell button a couple times. But I didn't. I held on. And that choice, that tiny, boring, unexciting choice to just stay put, ended up being the moment everything started to change. So this is my portfolio. My main position is SCHD, the Schwab US Dividend Equity ETF. My total cost basis is $13,510, or around $27 per share, and I've accumulated 493 shares. Right now, the current value is $13,603. My total paper gain, $93. And in September 2024, I received my first dividend payment. $9.10 hits my account. I remember seeing that notification and just smiling like an idiot. $9.10. I've spent more than that on a burrito, but it wasn't about the amount. It was about the proof that this actually works, that companies actually pay you just for owning their stock. In December, I received $37.80. Now, that's a decent meal. That's a tank of gas. That's real money showing up in my account that I didn't have to work for. In March, $64.40. The payments are growing, and I'm starting to see the compound effect. Each quarter, the dividend gets bigger because I'm reinvesting everything. Every single penny goes right back into buying more shares. In June, I got $87.99. Then September, $98.52. We're almost at $100 per quarter now. And I'm sitting here waiting for this December payment like a kid on Christmas morning. Because based on the trend, based on SCHD's track record, I'm expecting this to be my biggest payment yet. And that feeling, that anticipation of passive income hitting your account, it never gets old. And SCHD isn't my only position. I'm also investing in FXAIX, the Fidelity 500 index fund. My total cost basis is $11,083, or around $207 per share, and I've got 53 shares. Current value is $12,800. Total paper gain is $1,717. Now, this isn't about SCHD versus FXAIX. This isn't about dividends versus growth. This is about understanding what each investment actually does and building a portfolio that serves your actual goals. SCHD gives me income, real tangible cash that hits my account 4 times a year. October 2024, my FXAIX dividend was 10 cents, basically nothing. December 2024, it jumped to $24. April 2025, $25. July, $31. October 2025, $34.18. So yes, it pays dividends too, but they're smaller. The real power of this fund is the growth. That $1,717 gain, that's capital appreciation. That's the S&P 500 doing what it's done for decades, grinding higher over time. Meanwhile, SCHD focuses on high-quality dividend payers, which tend to be more stable, mature companies. They're not going to double overnight, but they're also not going to crater when the market gets nervous. And while the share price stays relatively stable, those dividend payments keep growing. Those quarterly dividends give me psychological comfort because even when the price is down, I know that check is coming. FXAIX is building wealth over time through capital appreciation. It's more volatile. Believe me, I've watched it swing both ways. But over the long term, that exposure to the full S&P 500 is what's going to compound my money into something substantial, and having both has made me a better investor. On days when SCHD is down, FXAIX is usually up. When tech gets hammered and drags down the S&P, my dividend stocks in SCHD hold steady. It's not about picking the winner, it's about building something resilient. It's not just about returns, it's about building a portfolio you can actually stick with when things get ugly. Now, let's talk about what this looks like going forward. My total dividends from SCHD so far is $297.81 and $114.28 from FXAIX. That's $412.09 in total dividends. $412 that just showed up in my account, money I didn't have to clock in for, didn't have to trade my time for. And next year, if I keep reinvesting, if these positions keep growing, I'm looking at potentially $600, maybe $700 in dividend income. That might not sound life-changing, but here's what it represents. Options. If I lose my job, that's a few $100 coming in regardless. If I want to take a risk on a side business, I've got this passive income cushion. If I just want to sleep better at night knowing money is flowing in from multiple sources, well, there it is. And this is where I want to get real with you for a second, because I see so many people in the investing community treating this like a competition. My dividend yield is higher than yours. Index funds are for people who don't understand investing. Dividend investing is for boomers. It's all noise. The only thing that matters is this. Are you building something that works for your life? Are you investing in a way that you can sustain through the ups and downs? Are you making progress toward your actual goals? For me, that meant accepting that I'm not a pure dividend investor and I'm not a pure index fund investor. I'm a guy who wants to build wealth and generate income, and I'm willing to use whatever tools make sense to get there. Some days that means loving my SCHD position because those dividends keep rolling in. Other days it means appreciating my FXAIX position because it's the one actually growing my net worth. I want to ask you something, and I really want you to think about this. Maybe even drop a comment below with your answer. What actually keeps you up at night about investing? Is it the fear of losing money? Is it the anxiety of missing out on gains? Is it the pressure to pick the right strategy? Because I think most of us are carrying around this invisible weight of having to be perfect investors, and it's exhausting. And maybe, just maybe, the solution isn't finding the perfect stock or the perfect fund. Maybe it's building something that's good enough and actually sticking with it. Looking at my portfolio now at that $42,800 number, I don't see perfection. I see a flat start, a choppy middle, and a lot of lessons learned. I see $93 in SCHD gains that taught me patience. I see $1,717 in FXAIX gains that taught me to embrace growth. I see $412 in dividends that taught me the power of passive income. But more than anything, I see proof that this works. Not because I'm some genius investor, not because I timed the market perfectly, but because I stayed consistent, and I didn't panic when things got rough. 1 year ago, I had $16,800, and next year, I'm not setting some crazy target. I'm just going to keep doing what's working. Keep buying SCHD for that dividend income. Keep buying FXAIX for that growth exposure, and keep showing up even when the market's trying to shake me out. This December dividend payment from SCHD, it's going to be the cherry on top of what's been an incredible year. And then I'm going to take that money plus whatever FXAIX pays out, and I'm going to reinvest it all. Because that's the game. That's how you win. Not by making the perfect trade, but by staying in the game long enough for compound interest to work its magic. So if you're watching this and you're sitting on the sidelines, or you've got a small portfolio that doesn't feel like it's doing much, or you're feeling overwhelmed by all the conflicting advice out there, I get it. I've been exactly where you are. But I learned that progress beats perfection and showing up beats sitting out. Now drop a comment and tell me where your portfolio was a year ago, or where you want it to be a year from now. Let's keep stacking, keep learning, and keep holding on, even when it gets choppy.